Ladies and gentlemen, good day and welcome to the Apollo Microsystems Limited Q4 FY'25 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Hiral Parekh from Dolat Capital. Thank you, and over to you, ma'am.
Thank you, operator. On behalf of Dolat Capital, I welcome all participants to the Q4 FY'25 earnings conference call of Apollo Microsystems Limited. We appreciate the opportunity to host this call and thank the management for their presence today. For today's call, we are joined by members of the leadership team from Apollo Microsystems Limited. This includes Mr. Reddy, Managing Director, and Mr. Sai Kumar, Full-Time Director Operations. With this, I now hand over the conference to Mr. Reddy to take us through the proceedings. Thank you, sir, and over to you.
Yeah, good morning. My colleague, Mr. Sai Kumar, will be presenting about financials and all. Then, for any questions, then I'm there to answer. Okay.
Good morning, everyone. I'm joined by, my name is Sai Kumar. I am Director Operations. I am joined by our Managing Director, Mr. Karunakar Reddy Baddam, and also our CFO, Mr. Sudarshan Chilveru. Thank you all for being with us today. It's always a privilege to engage with our valued investors and provide updates on our performance, strategy, and future outlook. I am pleased to share that Apollo Microsystems has delivered yet another robust quarter marked by consistent execution, operational discipline, and a strong commitment to indigenization and the Make in India initiative. Let me first take you through our consolidated performance for the year and fourth quarter ended March 31st, 2025. FY'25 has been a landmark year for Apollo Microsystems, marking our strongest performance to date. We achieved a significant milestone and revenue reaching 562.07 crores, representing a robust 51.24% year-on-year growth, which is in line and exceeding the guidance that has been given by us over the past few quarters. EBITDA stood at 132 crores, reflecting a 54% increase year-on-year with a healthy EBITDA margin of 23.5%. Our net profit surged by 81.18% in line with our annual guidance, and what we commit, we deliver. Now let's move on to the quarter 4 FY'24 versus quarter 4 FY'25 versus FY'24. In quarter 4 FY'25, our revenue saw an increase of 19%, reaching rupees 162 crores, compared to rupees 135 crores in quarter 4 FY'24. This growth is driven by a strong order book and the transition of several products into the production phase. Our EBITDA, excluding other income, also showed remarkable growth, rising by 25% to 36 crores in quarter 4 FY'25, while the EBITDA margin registered an increase of 100 basis points as compared to quarter 4 FY'24 and stood at 22% in quarter 4 FY'25. In a business defined by tailored, complex, and mission-critical solutions, sequential, that is the quarter-on-quarter, comparisons often fail to reflect the true picture, which we have been telling to all our investors from the beginning. The product mix and the delivery cycles of each product vary significantly based on the client-specific requirements. Accordingly, our annual performance remains the most meaningful benchmark for evaluating our financial and operational progress compared to our quarter-on-quarter results. We are also pleased to announce a significant strategic milestone, which is the acquisition of Ideal Explosives Limited. This marks a new chapter for Apollo Microsystems as we move closer to becoming a fully integrated Tier 1 defense OEM. The acquisition not only enhances our manufacturing capabilities, but also broadens our solution portfolio across critical areas of defense supply chain. Through this acquisition, it will not only be a vertical integration for us, but the various weapon systems that we have developed now and we are in the process of developing, and the weapon system that we are going to take up in the future, the raw material will be sourced from there. We are going to, increase our portfolio into warheads and rocket propellants and rocket motor designs through this acquisition. And also, we will be entering into a complete ammunition, cycle where different calibers of mortar will also be developed in-house and, supplied to our Indian Defence Forces, which will also have a huge export potential. As you are all aware that the huge inventory pile-up is being done across different parts of the world by different countries. So this acquisition marks a distinctive, growth, that will bring on to our company. It's a proud moment and a feather in our cap that positions us for greater impact and scale. The financial results of the acquired entity, namely Ideal Explosives Limited, will be consolidated starting from Q2 FY'26. Now I would like to give some updates on various corporate actions throughout the year. Our Unit 2 is scheduled to commence manufacturing its operations from the Q2 of this financial year. A partial operations have already started, but a full-fledged operations will start from the Q2 FY'26. Our Unit 3 we will start occupying in different phases. For the phase 1 of its operation, stage-wise, we will start occupying the, facility, because some of the facilities from the Unit 1, the production we would be shifting to Unit 3 from September of this financial year. The total capital expenditure allocated for phase 1 is 150 crores and for phase 2 is around 100 crores. The phase 2 of Unit 3 is expected to commence work in Q4 FY'26. So I would also like to give an overview on the working capital cycle of our company. The working capital cycle days are expected to reduce by approximately 100 to 120 days from FY'27 onwards. So the rationale I would like to give you is that, the several programs will be transitioning into a full-fledged series production phase. As you are all aware that we have a huge footprint, varied type of technologies and products across the weapon systems, both onboard and the ground support equipment side. So during the development phase, the cycles are very, very longer and, not very predictable. But during a full-fledged production phase, there is a defined production cycles and a critical planning in terms of the sourcing of the raw material and when the production has to take place, will be in a very clear manner, which will, effectively reduce the overall cycle of the working capital. At the same time, the facilities that we are outsourcing, presently, for the testing and other things, we are equipping ourselves within the Unit 3 by investing close to more than 50 crores for these test equipment, which are critically not available predominantly across, for catering to various programs. All those facilities we are going to put up in Unit 3, which will also further support us in reducing this overall working capital cycle. Regarding the preferential round which we are doing now, I would like to update that the approval has been received from both the exchanges on 19th May last week, and the process is expected to be completed within the next 6 months. The proposed preferential round of 816 crores of fundraise, it will be utilized for the working capital requirement, for the R&D expenditure, and also to foster innovation in future technologies, including investment in subsidies and other general corporate purposes. Looking ahead, we expect a revenue growth, which we have been giving guidance earlier also, to grow at a CAGR of 45 to 50% over the next 2 years also, driven solely by the core business, excluding any contribution from the recent acquisition. If I take into account the contribution of the recent acquisition, I am very happy to share with you that our revenue would double in this financial year. This growth is underpinned by a healthy order book and different product mix entering the production phase. The operating margins are projected to improve in the first half of FY'26 due to favorable operating leverage and product mix. However, ongoing and planned capital investments are expected to moderate margin expansions in the later half of FY'26 and into FY'27, but continuing to maintain the balance of, the profitability in terms of the PAT. You are all aware that there are several conflicts happening across the globe and a huge compilation of, inventory is being planned. We are slowly entering into that ecosystem and a very, very unique league of, companies who will be able to supply such complete weapon platforms. And also, notably, the recent conflict between India and Pakistan has also further accelerated the overall requirement and especially the demand for indigenous defense solution. And we are very happy that our solutions are utilized in the recent conflict, and also several procurements that are being done presently and in next few quarters. We will have a significant participation in that, and we are very happy to contribute for the nation. Several of our systems, as I told you, are successfully tested and demonstrated during this period. It has also generated a significant interest and engagement across the different defense value chains. Thank you all for your continued trust and support, and we now look forward to addressing your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Dhruv Nachrani with Sunil Invest Infra Private Limited. Please go ahead.
Hello, sir. I hope you're doing fine. I just wanted to ask you one thing. The recent acquisition that you've done of Ideal Explosives. Basically, that company, since the past 3 years, was not reporting gross profits. So what do you have to say about that, and how do you plan to turn it around?
Thank you so much. It was a nice question. So I would like to tell you that primarily the post-Lebanon issue, there was a setback in the company in terms of the COGS point of view. So that has continued to, give a setback in subsequent years as well. So as we see today, as of 31st March 2025, the company reported around 551.8 crores of revenue. But there is a significant improvement in terms of the costs. Primarily, the ammonium nitrate is a very sensitive item, and the pricing of which keeps fluctuating. So that's the reason, overall, there is EBITDA level loss that is marked in the company. But as we take over, it will become a positive EBITDA in subsequent quarters is what we foresee. We are now continuously talking to different suppliers for a long-term arrangement of ammonium nitrate, which will be a serious mix of both the domestic as well as the international imports. Several of the companies are presently, only doing, imports of the ammonium nitrate on a significant basis and little of, domestic basis. Similar mix, we are going to do. We are already in action. We have already employed a team of consultants, for making this long-term arrangement. So this is point number one. Point two, going forward, we will be transforming this Ideal Explosive, which is catering to the mining and infra base, to a, majorly into a defense explosive side, where we will be, doing both TNT, HMX and RDX based, systems that will be used, for which the operational margin will also be on a higher side compared to the commercial, explosive or the industrial explosive requirements. So I will not give any assurance for the quarter two, but in the subsequent quarters, we will be improving the EBITDA level margins of the company. Continuous interactions with the company and operational this thing is happening. The corrections that were needed in the company are being, already started implementation, and you will see in subsequent quarters, we will be doing it.
So do you think the loss margins of IDL would affect your 25 to 30% EBITDA range that you are targeting?
No, but you have to actually look towards the operational standalone P&L of Apollo Microsystems, not on a consolidated basis for the next few quarters. But you can also appreciate that, the overall accumulated loss which will be there in the company, that will give a benefit for us in terms of the taxation if you take it in the consolidated basis. So that is one additional advantage that will be brought. As the complete acquisition is not complete, it is not appropriate on my part to give a detailed analysis on the P&L and the balance sheet of the company, even before the actual clock date of the full-fledged merger. But you have to understand that for the next few quarters, you will have to look at the standalone balance sheet of Apollo. Subsequently, we will also gain an advantage of the accumulated loss because in terms of the taxation point of view, whatever the income tax outflow would be there, there I would get benefit because of the accumulated loss in the IDL actually. That will significantly improve the overall, PAT levels of Apollo in a consolidated basis.
Got it. Thank you for the answer, sir. My second question would be that the operating cash flows of Apollo Microsystems have been highly negative in the past few years. So it's just reporting a slightly positive in FY'25. So can you explain the reason behind that and how is it going to be in the future?
If you see the rationale which I have given during this opening speech and also in my investor presentation in a very brief way, I would like to make everyone understand that predominantly the company has a huge footprint of having participation almost every indigenous program in the country, and most of the business that we do or we clock in a year is a combination of development projects and development cum production projects. So year on year basis, the percentage of the production core into a series production phase is increasing. In FY'25 also it increased. Exact number I will not be able to quantify right now. But it will continue to increase in the current financial year and the next financial year also. As the percentage of the production, volumes in the overall, top line keeps increasing, the operating cash flow, there will be a significant improvement. You will see a huge, a remarkable change in FY'25 in our operating cash flow. It will be totally positive, and it is something that is going to carry forward in the subsequent years also. So you can see that, very few weapon systems, have gone into production. After Akash, there is no such weapon system which has gone into huge series production actually. Although there are several, dozens of programs which are, being done and the revenues are being clocked over it. But full-fledged production, not many systems have gone into. Now things have changed. Thanks to Indo-Pak conflict also that, the forces have also realized the serious importance of the indigenous system to be quickly deployed on a spiral development basis, because of which the revenues subsequently in the production phase also will increase, which will be anchoring the overall revenues, which will increase the operating cash flow of the company, which will also improve the overall number of working capital cycle also of the company.
Got it. Thank you, sir. My last question would be, in the unit 3...
If you don't mind to you and also to others, we have time up to 11:55. I have a 12 o'clock, another interview with Z Business. As the number of, people are more, I would request everyone to keep their questions only for two questions, not more than that, so that everyone will have a chance. This is a humble request.
Yeah, you can mail us, we'll respond to this thing. For any further questions you want to clarify, you can always mail to us, we'll respond to you.
Sure, I'll join the queue. Thank you for your answers.
Thank you. Our next question comes from the line of Rupesh Tatia from IntelSense Capital. Please go ahead.
Thank you, sir. Congratulations for good set of numbers. My first question, sir, is can you give comprehensive update on the naval programs, primarily mines program, underwater mines? I think we are expecting some order. Where are we on that? And then the 3 torpedoes, Varunastra, ALWT and ESWT. If you can give a comprehensive update on this, that will be very helpful.
Yeah, the multi-instance ground mine, if you are tracking the news, around 3.5 weeks back, the last phase of, the limited explosive trial is conducted, and which is a combat trial. And it has been a very successful trial, similar to the other trials which we have been doing for the last couple of years. We have been very positive based on the information that we were, talking in the Ministry of Defence that, the RFP, will be closed before March 2025. But because of this, the combat trial and also several stakeholders that are involved in this particular, because it's a very sensitive product. It has got a little delayed, but we are expecting this order to flow in this financial year. The finance, approvals and other things, including the RFP and the release of order, will be done in the upcoming quarters actually. This will be an opportunity, one of the largest opportunity for Apollo that we have been telling. But yeah, this is the reason for the delay, but it is something which is going to come. Coming back to the heavyweight torpedoes, the Varunastra approval for financial approval is already, obtained, given by MOD. RFP is also, all the formalities are complete. It's only, BDL getting an order that, after subsequent to that, we will get our opportunity, our size of opportunity. Same is the case with ALWT. I am restricted to give the numbers, but the numbers are going to be very, very large for ALWT, and we are having a significant contribution in that. And the heavyweight torpedo, electrical heavyweight torpedo, this is, point of view. If you see the couple of months back, we have announced an order received from Bharat Dynamics Limited, which is a, the production takeover kind of a project. During the development phase, to production phase, few numbers will be produced by the lead integrator, which is now a BDL here in this case. So that order limited, for a couple of numbers is placed. Few more numbers are going to come this month. We are expecting actually for that particular thing. And as far as the Navy induction point of view is concerned, in this financial year, electrical heavyweight torpedo order will be received by BDL and also to us.
Yeah, ESW2 case now, they are also configuring for the P-75 Captain class submarine also. Majority people are producing the submarine, and missile they are going to use ESW2 torpedo only they are configuring. That also limited series order we are expecting many time next 2 weeks time.
Thank you for that update, sir. My second question is, what is our order book as on date, and where do you expect it by, let's say, March 26? And also, there was very interesting this transfer of technology. I saw Prachand munition hardware. We got a TOT, and I think I'm hoping this is a helicopter. So if you can expand, give some color around that. So this is my second question.
Prachand munition is a landmine actually. It has nothing to do with the helicopter Prachand actually. This is a landmine.
Anti-tank landmine.
Okay, and order book, sir. Yeah.
615 crore as we closed last Friday.
Okay, and where do you expect by March 26?
I think we will triple our order book by March 26.
Thank you. Thank you for answering my question, sir. Yeah.
Our next question comes from the line of CA Garvit Goyal from Envesh Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Good morning, sir. Congrats for decent execution in the quarter. So my first question is, Apollo Microsystems extensive track record in electronic subsystems for missile platforms and its participation across 150 plus indigenous defense programs. So can you please elaborate on the company's current or prospective role in DRDO's Project Kusha, particularly in the development of fire control system, onboard electronics, or radar integration for that matter in the components for M1, M2 and M3 interceptors that will be under the phase 1 and 2? That is my first question, sir.
Kusha is like S-400 type of program. It is going to be 150 kilometer range, 250 kilometer, 400 kilometers kind of thing. Okay. We are providing a lot of subsystem to Kusha. In fact, because of urgency and a lot of pressure from MOD, DRDO has placed order on couple of industries. So we are the first people deliver the systems. Almost 4 or 5 subsystems we are doing for the Kusha program. Onboard, it goes into onboard this thing. Critical actuation system like rear actuation, front actuation and all we have already supplied. We are the first people deliver these subsystems. We are also doing launcher systems also we are making. And we will be completing any time next quarter before September. And also must have heard about QRSAM and Akash India and all. QRSAM already government has released 25,000 crores. We have a huge contribution in QRSAM program also. So we are continuously meetings are taking place, and we are gearing up for the production activity. So anytime next 2 quarters, we are expecting order from BDL. BDL is a production agency for QRSAM. BDL and Bharat Electronics together, they are doing the production.
Got it. And secondly, given our expertise in RF and microwave subsystems through Ananya and your long-standing participation in critical indigenous defense programs, including missiles and naval platforms, so how is the company positioned to capitalize on emerging demand in radar and electronic warfare domain, particularly if I speak about the fire control radars and GaN-based ISR radars? So has the recent conflict with our neighbor and India's demonstrated operational readiness led to any concrete engagement or any visibility around large-scale contracts, either from the Ministry of Defense or any export inquiries for that matter?
So RF side, we went a little slow. This year we are going to accelerate. We are talking to a couple of companies in RF space, for acquisition further actually. The RF portfolio we will increase. Presently, in RF side, our presence is very, very less. But this is something that we are going to accelerate.
Akash and QRSAM will be getting good orders, RF related things.
Thank you. Mr. Goyal, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question comes from the line of Deekshant with DB Wealth. Please go ahead.
Hello, sir. Congratulations on the good results. Firstly, sir, the question is, we have a pattern of pledging our shares and then revoking it. So specifically for Mr. Reddy, could you help us with this sort of thought process? Because I think it will help with investor confidence as well.
So primarily, a couple of 2.5 years back, we have done a preferential round in order to maintain the shareholding percentage. The promoter has also participated in it. Not only for that reason, promoter by himself is quite positive and bullish about the company, and in the current preferential round also promoters participated. So the participation has been done by raising funds by pledging the shares. And at different levels, the shares are pledged, and as and when there is an appreciation in the share price, as per the understanding with the lender, to then CMP price, the release of the shares which were on the higher side are being done from time to time. So you will see a share pledge and release from time to time happening, for that reason actually. And I would also like to mention that the funds that are raised through pledge of shares are all deployed in the company, and no pledging or any debt is raised by the promoter for any of his personal requirements in investments in any other entity or any other requirements. It's purely an investment back into the company as an equity back in the company. The current preferential round also, the promoter group has participated significantly, and that is being done. And
also using for acquisition purpose also, these funds are raised.
And we have also raised some funds in our subsidiary, for which promoter has also given his shares as a guarantee actually. So that's how the pledge also took place for that reason as well. And this is something that we are going to do. There is nothing alarming situation. Everything is purely in our control, and we foresee that the performance that will be recorded by the company and the kind of the defense initiative that is being there, the price of the company would appreciate with and the investors would understand what the company is doing all about, and the promoters loss also will come down in the subsequent quarters.
So completely understand. In fact, if we are going for a new phase of growth, then we would need capital. This is very helpful. So secondly, what kind of dilution of shareholding can we expect in the next FY, like current to next FY, the next 2 years?
Currently, promoter holds around 55%, on overall stake in the company. It will come to close to around 50 point some change, which is close to 51%.
Okay. And what is the total pledge, if you could clarify that for us right now?
I'll have to check the records, if I can give the answer to you by checking the records appropriately.
No problem, sir. Sir, you have mentioned two questions on the production stage here. You have mentioned that we are now going into production stage for a lot of class of weapons. Could you just elaborate this? And also in this presentation, we have seen BrahMos being mentioned. So what is our role in this and any other air-to-surface weapons?
We are working on, there is a program called the AAD program, and also working on QRSAM program, Akash NG also surface-to-air missile, and Kusha also S-400 class type one, like Kusha also a lot of contribution is there.
Astra air defense point of view.
Astra air defense program also contribution is there.
Thank you. May we request that you return to the question queue for follow-up questions. Our next question comes from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah, hello sir. Thank you for taking my question. So the first question is, could you highlight which are the products and programs wherein we as a company are supplying the product end-to-end? Like the underwater mine is an end-to-end product wherein we will supply the product directly to Navy. And for those programs, what is the estimated size and the timeline that you expect those programs to come in?
Underwater mines, I have already given the reply, sir.
Yeah, similar to underwater mines, which are the products wherein you will be directly supplying the entire product?
Yeah, we are doing one anti-submarine warfare rocket also for Indian Navy, and there is a man-portable mines called limpet mines also, that we are giving to Indian Navy. Presently, our medium-range rockets are under development under Make 2, which will go for trials in the coming quarter actually. That is one full-fledged, system that we would be doing. Apart from that, we have started an in-house development of Vishorat rockets also. There is an recent, EP program which is happening from Indian Army, for which we have submitted bid last week actually, which is going on a significant thing. As you are aware that we have entered a MOU, joint development MOU with Garden Research Shipbuilding Engineers for developing a mini torpedo. All the build blocks are already available. Continuous interaction is happening. So mini torpedo is one such thing, which which will go for a development. And in the mines classification also, there are some, deep sea, deep ocean mines requirements, which are basically with a mooring mechanism called moored mines. That is also something, which we have, the development is already complete. It's a non-DRDO program presently. It is got converted into DRDO program last couple of months back only, but we finished development in more than 1.5 years back, and we submitted our samples for evaluation to DRDO. So more in offing, there are another 4 or 5 programs which are very classified and sensitive, which I will not be able to divulge at this point of time. But as and when certain things keep happening, then we'll inform to the investors about it, and then we can have a more elaborated discussion on that.
Oh, God. So the second question is just a clarification on the margin commentary, which you said that in H1 FY'26 we will see a better margin and that margin expansion will stop. So does that comment mean that the margin expansion will stop, but we will maintain the improved margin that we will see in H1 FY'26, or do you expect margins to contract from, say, H2 and FY'27?
I didn't get your question. Somehow the voice was breaking in between.
Yeah. So the question is, you have mentioned that in H1 FY'26 we will see improved margins, right? But you expect that expansion to stop from H2 FY'26 and going into FY'27. So does that comment mean that in H2 and FY'27 we will see margins contract, or is just that the expansion will stop?
No, it's not that the expansion will stop actually. You'll have to understand that, as the, quarters progress, there's a lot of interest loading that keeps happening because of the long-term debt that is there in the company. Okay. So initial part of the financial year, there will be a margin expansion. Later, there may not be a, significant margin expansion, but it would be flat actually. It is not that it will reduce. There is an interest loading that happens because of, the continuous, the completion. By September, we will be drawing the complete this thing. That is the guidance that we are giving at this point of time.
Thank you. We move to the next question from Dipanshu Bhatia with Finviz. Please go ahead.
Hello, am I audible?
Yeah.
Yeah. So I have two questions. First thing is, for the fundraising, the round that we have planned, it's now around 816 crore. Are we confident that we are going to receive almost 98 to 99% of the payments, or is there risk some investors can back up at this moment?
Something which is not in my hands, I cannot comment. It's only matter of 1 week you will get an answer. So please.
Okay, so the payment will be received by a week or two.
No. I wanted to tell you that the promoter group has already put in money. Okay. So that's the only thing I would like to give a comment as of now. How much participation would be there based on market conditions is not something. As I speak to you, we are continuously interacting with investors. Most of them are very positive. They are talking to us. Promoter on the first day itself, promoter has already put in his money.
Okay. And for you people also, for next 2 weeks, you will be able to assess how many people are committed, right? But you will be receiving the payment for the preferential at least. So
preferential and warrants both, right? Both has to be done. Yeah.
In a week or two, or it will take 6 months to receive the payment. That's what I want to understand.
No, week or two only.
About participation, having a 1 week tender time.
So during the speech, the 6 months context during the speech was that, in 6 months, the complete conversion of preferential, will be complete because, the warrants is for the 6 months only. And for the preferential equity point of view, in 6 months, the conversion will be complete. So that was the context.
Okay. It's the conversion. Okay, got it. So the second question is about the order. I think you have already answered that, but I want to know, is there a possibility the huge order for the naval defense and those 1,000 crore type of orders that everybody is waiting for some time, and I hope you are working your best towards that. Is there a possibility it can move beyond 2025? We might be receiving in Q4, FY'26 or something, or is it we might get in 3-4 months max?
As the day stands, the information what we are getting, it will not go beyond something.
The file is moving, and as per the MOD, the RFP we are expecting, June month we are expecting. From there, it's only processing time.
Thank you. We move to the next question from Aman Vij from Astute Investment Management. Please go ahead.
Yeah, good morning, sir. My first question is on IDL. So could you talk about what is its order book currently, and where do we see this order book going in the next 1 to 2 years?
We are not in access to that presently. We have only entered an SPA agreement, and until the share transfer agreement is done, that information may not be access to us, and I cannot comment on that as of now.
Sure. Next question is, if you can give an update on the ATGMs, because there's a lot of things happening on that side, as well as I read a couple of articles on Rudram, Star, and I think the LRGB. Also, there's a lot of trials happening. So do you expect any orders from these programs in FY'26 as well, or mostly it will be in FY'27 and later? First, if you can give update and then see.
LRGB, we are expecting orders when it is some emergency orders also we are expecting. This LRGB DCPP partner is Adani is one of the DCPP partner. In fact, there was a emergency inquiry also we have submitted, and they are expecting some emergency. Under emergency, they are expecting some orders, and also bulk quantity orders also they are expecting before this financial year.
And also NAG, Helena, and other MP ATGMs, we have a participation. There are different actuation system, fuses, and other things several systems are going in multiple ATGMs actually.
Few hundred, this thing already inquiry has come already. I think next 1 month time they will be releasing order.
Which also includes Rudram and Star.
Yes.
Thank you. Our next question comes from the line of Utkarsh Somaiya with ICO Quantum Solutions. Please go ahead.
The opportunity. Can you please give a guidance on your EBITDA margin, interest, and depreciation for FY'26 and 7?
Not presently on the EBITDA and the PAT levels, but on the top line levels, I gave my, this thing, 45 to 50% we will grow. But I can say even in spite of, the long term this thing, our PAT levels will continue to grow. But how much expansion would be there on a PAT level? I think, a better guidance I will start giving from H1 onwards.
No, I want EBITDA margin, interest cost and depreciation. These things.
Both the guidance up to H1 I will not be able to give because we are in a severe expansion mode. All put together on H1 period only I will be able to give more clarity on that. But I would like to say there will not be any dip in the EBITDA levels. There will be an improvement, but exact guidance on the numbers, H1 period I will be able to give with more clarity actually.
Okay. And with the acquisition, you said your revenue will double in FY'26, approximately 1,100 odd crores. Am I right?
Yeah.
And from there, you expect a 50% growth in FY'27 to 1,600 crores.
Whatever growth guidance I am talking only on a standalone basis.
No, you also mentioned you would double your revenue in FY'26 with the acquisition.
That's what, the guidance which we gave 45 to 50% growth is on a standalone basis, but on a consolidated basis, our revenues will double. That is what I said.
Yeah, I understand that. So what I'm trying to understand is in FY'27, when we look at the growth from the consolidated revenue we'll do in FY'26, do we still take that as 50% or a lower number? On a consolidated.
No, you are not understanding actually. I am giving a guidance. I will continue to grow 45 to 50% in this financial year, next financial year on a standalone basis. Consolidated revenue, this financial year we are going to double the revenue. Okay. Next financial year, unless, the company comes into my hold, where, I start fully operating the company, I will not be able to give any guidance on that particular company. But keeping the way, the trend with which the company is recording its sales for last 3-4 financial years, we foresee that, we will double the revenues on a consolidated basis, but my standalone guidance of growing at a 45 to 50% CAGR on a standalone basis, it will continue this financial year and next financial year also. On a standalone basis.
Okay. And one last question, if you don't mind. What will be your total share outstanding post the dilution?
Numbers are very tough to remember actually. You may record the question, I will answer it to you offline.
Thank you, sir. Our next question comes from the line of Pratik Bagadia, who is an investor. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for giving me this opportunity. Most of my questions have already been answered. So I just want to understand one thing, that last time when we spoke in the last quarter, promoter pledge part was around 33%, which now has moved to close to 48%. And as per my understanding, our company's guidance was that by FY'26 will completely remove our promoter pledge part. So are we still sticking to that?
No, the pledge percentage will come down. No, when the price was 55, 60 rupees only, we have pledged actually. I'm expecting, I'm expecting back, the shares from various vendors. The percentage will come down like anything. Maybe I'm expecting some 15% will come down. Next 1 week, 10 days time.
Okay, no, but by FY'26, how can...
At 33 to 47%, we have raised funds in our subsidiary for which the, shares are pledged. For the acquisition, the funds are raised, for which the shares are pledged. That's why you are able to see. But 33 to 47%, I don't think it has jumped. But exact thing, I have to check actually how much it is.
And actually, we are closing also. We are closing also. Maybe next 1 week, 10 days time, we are closing some accounts also in fact.
Fair enough, sir. So just a request, if you can share a press release whenever our process is done, that this is the exact promoter pledge part that stands, it would be very helpful for all the investors.
A press release is not mandated actually. As and when there is a release, it gets automatically updated in the exchange. But you can keep track of it, or you can get in touch offline, through our investor relationship email ID. We'll quickly reply on to that.
In fact, yesterday, somebody released some 4-5 lakh shares. So that will come automatically. You can see on this thing.
No, I understand, sir. So my last request is, I don't know if how much we are allowed to ask on specific on the programs, because defense being a very sensitive area from the national security point of view. So I'm not sure if all the participants are, allowed to ask on various programs like torpedoes, missiles, and submarines. So I just wanted to check on that, if we are allowed to ask such questions or not.
You can ask any question. There is no bar for it. To what extent we can reply, we will reply to it based on the sensitivity of that particular program.
Thank you. We move to the next question from Divyasha Shah from Uchit Capital. Please go ahead.
Sir, my question is somewhat conceptual question. Sir, we are becoming a tier 1 for the defense and aerospace ecosystems. Sir, what will be the difference and what is the financial potential for becoming a tier 1? And who are our 2 or 3 nearest competitor as a tier 1 supplier? And sir, what is the total addressable market for tier 1 supplier? Total addressable Indian defense market for tier 1? This is my first question, sir.
Addressable Indian market in over a period of next few years is going to be few lakhs of crores, okay, which is very highly boggling kind of a figure. But we would not like to say that, we are trying to address that market. In a very subtle way, we want to tell you that the size of the market is going to be so big that any single industry, will not be able to address that particular market. That is the reason when the only mandate was there with the PSUs. The mandate, government has started believing that, it has to be spread across the different private industries also who can raise the capital fast and who can able to take a decision fast and meet the, inventory requirements of the forces. We are also getting into that particular specific league wherein we will be able to, address that particular market. By acquiring explosives, company, we have got into a very, very unique league who, as a company, who can design the, systems inside the weapon and who can integrate the weapon, which we have been doing, for other programs, in different applications. And also we have an expertise in the ground support equipment side in terms of the launchers and the fire control system side. Explosive becomes a very extremely added advantage because today in Indian ecosystem, the explosive filling capabilities hardly any companies have. Like Premier, Solar and Munitions India Limited. There are other very small companies, but everyone has to understanding the composition in terms of the warhead explosive and the propellant and the design capability for that, and in-house investing in terms of the development during the development is something very, very critical and not many players are doing, including the players which I told. This is a league which we are, entering, and it's not a short-term goal for Apollo, it's a long-term goal for Apollo. By fostering this relationship with this ideal explosives in terms of the acquisition, we would be, aiming towards a league where we will manufacture the entire weapon, both for the country's requirement and also for the lot of exploding inventory pile-up requirements across the globe, wherein we will be manufacturing not only a missile kind of a thing, short-term, medium-term rockets, hand-launch rockets, ATGMs, mortars, and aerial drop bombs. So the portfolio size is actually going to increase in terms of the value chain. That's the rationale in acquiring this company.
Thank you. Ladies and gentlemen, due to time constraint and other commitments, we hand the call to the management for closing comments, and for further questions, please mail to the investor relations team. Thank you.
So thank you so much. I would like to sincerely thank all of our investors for their valuable participation in today's conference call. We are fully committed to continuously improving our performance as given in our guidance, and we also assure you that we will make every effort to achieve better results moving forward. Thank you once again, and we eagerly anticipate reconnecting with you for the Q1 update. Wishing you all a wonderful day ahead. Jai Hind.
Thank you.
Thank you, Daulat Capital, for facilitating this earnings call. We truly appreciate the questions asked by all the investors and enlightening all other investors. I also understand that many investors could not, ask their queries because of the, short period of time. But we would love to answer every question. And I personally, and joined by me, our Managing Director, Mr. Karunak Reddy, we both personally invite every investor to come and visit our office and see the exact process, and the criticality of which in developing a weapon system and avionics system which are safety critical, and what makes it so critical to manufacture it. Every first system to every 100th or 1000th system that is produced, every system has to undergo the qualification, which is a tedious, time-taking critical process. Only if you see, you will be able to understand. You may take our time and visit our office. We would love to host and, showcase the capability and overall process.
You can also see upcoming facilities like Unit 2, Unit 3 also you can see.
Thank you so much.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.